Well, joining me to bring the day's market moves into perspective is Anthea Gardner from Cartesian Capital. Thank you so much for your time, Anthea. Quite a lot that has happened in the macro economy in the US. We did get that PCE inflation figure coming in line with expectations. Also did get that US GDP yesterday that surprised to the upside, but still disappointing data coming out of China, as we did see with those PMI figures earlier on. What are you making of market sentiment right now? Because it still seems largely positive.
So it feels like the Santa rally has started, and long may it last.
Yeah.
But the market, even though it was positive, felt like it was very much on edge, today. And you would have thought after yesterday's US GDP number, pointing to a rate cut, maybe that markets would be happy about it. But it was all about the CPI. It's all about inflation at the moment. And inflation came in line, headline at 3.5 and core at 3. Have I got it the right way around? Which is well above the Fed's 2% target rate. So that really still supports the higher for longer thesis. And although I'd like to think that the Santa rally will continue, I think, I don't think the higher US GDP numbers are going to help us through December. And then everybody's talking about rand weakness. I actually think it's dollar strength, by the way. And that's because rates are going to stay in the US, are probably going to stay higher for longer, and money flows to the higher yield.
Yeah.
And it just really gives the Fed justification,
Yeah. And I mean, obviously something that could affect that inflation picture is oil. And OPEC, have they met already or not? I actually haven't been. I just know that they're supposed to meet today. What are the expectations out of there?
I haven't actually seen what happened, but the expectation is that they will cut production. And so you are expecting a higher oil price. And well, we'll talk about my stock pick in a while.
Okay.
But I think this El Nino effect, I'll give you a little hint.
Yeah.
The El Nino effect is going to push agri prices higher as well. And that's going to cause inflation. And so there's not much good news to keep the market green through December, is there?
Yeah. Well, let's talk about a green grocer. Yes, green and red, Spar, as we're talking about inflation as well, being one of the headwinds for the company. So, I mean, they did get double-digit growth in that top line in turnover, but then obviously that did not translate to the bottom line, as we did see headline earnings per share almost halving. And of course, they've got a lot of different dynamics playing out in the different geographies. And then also they had that SAP implementation that just went haywire. But actually, we did get a little bit of a boost from the markets. That share price, the last time I checked, was up about 3%. And so talk to us about the results, but also if there are maybe some encouraging signs that some investors saw today.
Let me give you a wrap of the results first.
Yeah.
So it's terrible. It looks terrible. Maybe the 3% rise is, on future expectations. But operating profit down 47%. Their operating margin, which is like the important stuff, the profitability of the business, 1.2% in an industry that normally operates at around, or gets an operating margin, I should say, between 6 and 7%. And I'm being a bit unfair comparing Spar to the general market, because one of the things we forget as consumers is that Spar is actually a seller to wholesale. Yeah, they're a wholesaler, put it that way. Sorry. So not just to retail like us. And the SAP problem that you mentioned at the KZMDC caused them to not be able to push out product to their clients, not us necessarily in store, but you're seeing that store owners are now having to go directly to suppliers instead of via the Spar brand or the Spar DC, and that's been a problem. And then they're making these losses in Poland, also in the wholesale business, and I think it's time for them to exit there. And then the Switzerland thing is interesting, because you would have thought that they'd be able to maintain a decent profit because things are so expensive in Switzerland and people are used to things being expensive. But actually, it's the opposite way around, is that the Swiss are now crossing the border. And this is a phenomenon that's been going on for years.
Yeah.
The Swiss crossed the border to get cheaper product. And Spar has about only 3% in Switzerland, so barely anything to be talking or writing home about. So maybe it's time for them to exit that as well.
Yeah.
And then I think it's a story of, well, maybe they're just going to kitchen sink, Poland and Switzerland, and they've come so low. Maybe they're due a bounce. They did say they want to focus on fixing those IT issues in the DC.
All right. Before we get to your stock pick, Anthea, I want to look at Lewis. Very, very interesting there because they are mostly a credit retailer, saying that their top line grew over 8%, that margin increased, the dividend was up, even though that bottom line was down 6.6%. We did see a surge in the share price there of over 5%. Just talk to us about the dynamics there and just also how they're catering to consumer appetite and ability at this point, purchase ability.
I think one thing I want to point out is that the number of accounts paid, because you called them a credit business, improved by 1.1 percentage points. And so their collection rate on their credit sales is good. It does worry me, though, that their cash sales were down over 14% and their credit sales was up by 19.5%. And so even though revenue's up, you're seeing a HEPS fall of 6.6%. And I think this is probably where this is non-discretionary. So the consumer doesn't have to buy a new couch or a new TV or a fridge unless they absolutely have to. And so it's interesting to see kind of that comparable store sales grew by 1.9% and kind of the traditional retail segment increased, but other sales like the furniture business, UFO, declined by 14%. And they made a point, by the way, because I think they understand where the consumer is, in a difficult position. They made a point of saying that they are going to maintain strict criteria for granting credit. And so really attracting lower risk credit client base. And I think the market understands that is the right way to go in this economic environment.
Yeah, indeed, as we have also seen from other retailers as well. Right, let's quickly get to your stock pick for today, Anthea. What will it be? You mentioned El Nino early on.
Yeah, and you're aware of it, right? Because our finance minister and the governor of the Reserve Bank mentioned it recently. So we know we're expecting El Nino related climate anomalies. And this type of weather historically has been a fairly reliable factor for rising crop prices. And so you don't really want to be owning distributors. But we found two ETFs that we actually like. One of them is called Wheat, W-E-A-T. And that gives you exposure to the wheat market or the price of wheat, because you can imagine as supply decreases, demand stays the same. Of course, don't forget, we've still got this geopolitical story with Russia and the Ukraine, where Russia's actually just not willing to renew the Black Sea grain deal or agreement. So that should see a nice little bounce. And then the other one we saw, which I quite like, is an ETF called MOO, M-O-O. And that gives you exposure to agriculture-related products, livestock, fertilizer, all the things that you're going to need to improve your crop output.
I like the names there, Wheat and Moo, quite apt. Thank you so much for your time and for your insights today, Anthea. Really appreciate it. That was Anthea Gardner from Cartesian Capital.